Hi, everyone. We'll be starting very soon. We're waiting for more participants to join. Great. We'll kick off then. Good morning, everyone, and welcome. I'm Paulina Villalpando. I'm Associate Director of Nature at HSBC, and I'll be moderating today's webinar. For those who may not know me, I'm part of HSBC's Global Sustainability Team, and as part of my role, I oversee HSBC Group's philanthropic partnerships for nature, including the partnership that we have with the Zoological Society of London. Prior to joining HSBC, I led the High Conservation Value Network for 10 years, where I worked closely with companies, certification schemes, and civil society organizations like CETESL to protect biodiversity and the needs of local communities and indigenous peoples in commodity production contexts. So before we kick off, a bit of housekeeping. So I would like to remind all attendees that this webinar is being recorded and that it will be published in CETESL's YouTube channel. So if you ask a question during the Q&A section of the webinar, please bear in mind that these may be included in the recording. Remember that you can submit questions at any time using the Q&A function at the bottom of your screen. And then finally, CETESL will be sharing a short survey by email after the event. So we would be very grateful if you could help us complete that survey and let us know what you thought about this webinar. So the webinar will last about an hour and 15 minutes. We will first have brief presentations from our guest speakers, and then we'll move on to a short panel session followed by questions and answers from the attendees. So our speakers today are Robert Allen, partner and head of ESG at Simmons and Simmons, Olivier Tichit, director of sustainability and communications at Musim Group, Leslie Saju, Policy and Engagement Manager at ICL, and Imogen Fanning, Sustainable Business Advisor at the Zoological Society of London. So according to the World Resources Institute, since 2014, the EU has been the second largest importer of goods linked to tropical deforestation after China. So the EU Deforestation Regulation, which we'll be covering today, is a major milestone in the fight against commodity-driven deforestation. So our speakers today will help us to unpack two closely linked topics that are moving quickly up in the agenda for financial institutions. First, why deforestation is a material risk for financial institutions, and secondly, how the EU Deforestation Regulation, or EUDR, is reshaping expectations, creating new compliance requirements, shifting risks profiles, and opening up opportunities for those who can respond early and credibly. So deforestation, it is clear that deforestation is not only an environmental issue, it can translate into real business impacts, supply chain disruption, legal and regulatory exposure, reputational risk, and changes in market access and cost of capital. So for banks and investors, that means it can affect client performance, portfolio resilience, and ultimately our ability to support sustainable growth. So over the past year, HSBC has been partnering with the Zoological Society of London to develop a practical guide to help financial institutions to understand the EUDR and identify not just the risks, but also the opportunities that could arise for sustainable finance. So the guide is now publicly available on the CETESL website, and we'll provide a QR link at the end of the presentation. It is open access for any financial institution to use, and it's really helpful to learn how to support your customers or others in navigating this regulation. So our first presentation will be by Robert. So I'd like to now open the floor to Robert Allen, who's from Simmons and Simmons, which is an international law firm headquartered in London. And Robert will be providing an overview of the EUDR, which will be helpful for those who may not be that familiar with the regulation. So Robert, over to you.
Thank you, Paulina. I hope everyone can see the screen there. Just to add before I start, at Simmons, we're also pleased to work with ZSL on that EUDR guide, just helping with reviewing it for accuracy. So, as Paulina said, I'm going to give a 5 minute overview, as much as one can in 5 minutes, of the EUDR. And when people talk about the EUDR, they're really talking about the EU using its market power to try and force cleaner global supply chains. So the regulations aimed at making sure that certain commodities and products sold on, made available on, or exported from the EU market aren't linked to deforestation or forest degradation after the 31st of December 2020. The
Sorry,
regime,
Robert. Sorry to
yes,
interrupt you. Would it be possible to make your screen full screen so that we can see your slides better?
is that better?
Um, yes. It's still a bit small. I think you have to click on full screen. Yeah.
Okay. Okay. Um, the regime focuses on seven commodities that have long been associated with deforestation risk: cattle, cocoa, coffee, oil palm, rubber, soya, and wood. But the scope's wider than just raw commodities. It also captures many derived products. That means you're looking at things like beef, leather, chocolate, cocoa products, palm oil derivatives, tires, soya-based products, furniture, and certain paper products. As to who is caught, the regulation applies to operators and traders. And broadly speaking, operators are those placing relevant products on the EU market for the first time or exporting them from the EU. And traders are other parties making those products available further down the chain. The heaviest obligations fall on the larger operators. Small and micro enterprises have a lighter touch regime focused more on record keeping and traceability. Non-EU producers will be affected in practice if they're feeding products into EU-bound supply chains. Simplification amendments to the regulation have reduced the burden on the downstream parties. The obligation and responsibility to submit the due diligence statement, which I'll come to in a second, now lies with the operator who first places the relevant product on the EU market. Downstream traders and operators do not themselves have to submit a fresh due diligence statement. Instead, they collect and retain the reference number of the initial declaration, which means traceability and record keeping obligations remain central for these parties as well. Where a product has not yet been subject to due diligence, the operator responsible for the first placement on the market must carry out due diligence and submit the statement. In substance, the regulation boils down to three core requirements. First, the product has to be deforestation free. Second, it has to have been produced in accordance with the relevant legislation of the country of production. And third, before the product is placed on the market or exported, a due diligence statement has to be submitted through the EU information system. That legality limb is broader than just environmental law. Depending on the circumstances, it can extend to land tenure, labour rights, human rights, indigenous rights, tax, anti-corruption, trade, and customs. So to comply with that, businesses have to go through the three-stage due diligence process. First, they need to gather the necessary information, including geolocation data for the plots of land where the relevant commodity was produced. Secondly, they need to carry out a risk assessment to determine whether there is any real risk of deforestation and illegality. Thirdly, if that risk is more than negligible, they have to mitigate it. And if they can't get that risk down to negligible, the product can't lawfully be placed or exported from the EU market. So it's not like other ESG regimes, just a disclosure regime, it's an access to market regime backed by operational due diligence. Another important feature is the Commission's country benchmarking system. Countries are classified as high, standard, or low risk. That matters because it affects both the level of due diligence that can be simplified and the level of enforcement scrutiny that businesses can expect. There's currently debate in Brussels about whether the EUDR should be further simplified, including renewed discussion in some quarters about a possible no risk country category. The Commission's required to publish its simplification review by the end of this month, and that might indicate whether further legislative change is being considered. Enforcement is left to member states, which must appoint competent authorities, carry out checks, and impose effective, proportionate, and dissuasive penalties. And those penalties can be very significant. They include turnover-linked fines that cannot be set below 4% of annual union turnover, confiscation of products and revenues, and temporary exclusion from public procurement or from access to EU markets. On timing, the key point now is that although the regulation is already in force, the main obligations apply later. The current timetable is 30th of December 2026 for large and medium operators and traders, and 30th of June 2027 for most micro and small enterprises. So there's still some time, but not much really when you consider the complexity of many global agricultural and forestry supply chains and the possibility of further legislation. Paulina, I'll pass over to you.
Thank you, Robert. It is clear that although financial institutions are not directly regulated under the EUDR, they may or may not be indirectly impacted through the companies sitting in their portfolio. So we thought it would be useful for our attendees to then hear from a company that has been preparing for the regulations entry into force for several years now. So our next speaker is Olivier, Director of Sustainability and Communications at Musim Group, which is an Indonesian food company operating globally in the palm oil industry with presence in more than 13 countries. So Olivier, can you tell us a bit more about what it means to implement all of these requirements in practice from the perspective of such a big company like Musim?
Thank you, Paulina. And it just struck me that we just got an update on EU regulation from a UK law firm. That makes my day. Really, I didn't realize during the preparations. Just for Musimas, yes, we are an integrated palm oil company. We do also some coconut. We're integrated, meaning we're present from the plantation to functional products, originally a soap manufacturer. The EU for us is an important market. We have even industrial operations in the EU. So anyway, we need to feed our operations in the EU. Others might not have that link to the EU and might feel tempted to abandon the EU market because EUDR makes it too complicated for them. It's a genuine risk. So I'm not going to make a list with about what's wrong with EUDR. It's a compliance requirement, like Robert has just mentioned. It's a market entry requirement, anyways. So, but practicalities, I want to add two things to what has just been said. One is that it's an all or nothing regulation. So it's not just risk. You have to have zero risk. It calls it negligible, but it means zero risk. It means also that your supply chain has to be entirely compliant with EUDR, or it is not at all compliant with EUDR. The second point, which is linked to the first one, is that it is a physically segregated supply chain that you must have from end to end, which poses some very interesting logistical issues and supply base issues. So now on deforestation risk and EUDR, slightly different approaches or slightly different practicalities as well. First, for us, about 85% of the raw material we process is from third parties. That includes, depending on the years, anything between 600, 500,000, 800,000 smallholders each year. So how do we handle that? First, let's look at how we handle the deforestation risk. Deforestation risk management, and that's the key element. I think the palm industry has had to evolve quite a lot over the past 20 years. See the RSPO, we might touch about them a bit later. Most important is that we got used to looking at our supply base, engaging with our suppliers, getting more information, or getting them to commit to no deforestation in particular. There's also been some massive changes in how we can do that, in particular in terms of satellite imagery, how available it is, how detailed it is, how quick it is, and the computing capacity associated with it, on how we can analyze it. So it's not only about monitoring, it's about risk assessment, like is required in the EUDR, except on the regular basis, we might do it slightly differently. Most of the companies will have their own methodology. For us, it's what we call the risk management framework. So risk indeed included in it. We ask for extremely detailed information. We expect extremely detailed information from plantation companies, so people who have large estates on which they plant palm. But we have to handle a lot of smallholders, as I mentioned, and they're not directly supplying us. They're supplying the suppliers, our suppliers. So how do we do that? We try to sidestep the issue by leveraging technology. So how do we look at smallholders? We look at either we have perfect information, we know the plot of land individually, we can link it to our supply chain, we can analyze its deforestation risk. If we do not, which is often the case, we look at through satellite imagery at the palm planted areas. We have some very fine satellite images now. We can leverage on that and take on more risk. Let's say if we have a village, if we know that we get a few, our supplier tells us they get some supply from a village, we'll take the entire palm planted area in that village as part of our risk, potential risk anyway. So we'll assess the risk associated, the deforestation risk associated to that. Today, using these methodologies, we can say that our supply base is 99.5% deforestation free based on methodology. Our methodology is available online. But the trick is, how do we get it verified? How can you trust our result? We get it verified externally, and we're not the only ones doing that. I think it's become pretty common practice in the palm oil industry to get your results, your implementation of a certain methodology verified by a third party independent. It's a matter of fostering trust with our other stakeholders, including financial institutions, but also it's a way of not having to share some granular, very private information. And sometimes we have suppliers who refuse for us to share further the information. They might be comfortable sharing it with us, but not further on the supply chain. So the palm oil industry has matured a lot in that regard. How do we do for EUDR? EUDR is a slightly different animal in as much as it has a very specific deforestation definition. Like I said, it's an all or nothing, and it's a fully segregated requirement. So how do? We go to zero risk. Basically, we do not accept any shadow of a risk for our supply base, which means we use what we have done for our entire supply base, and we slice out of that the parts which can be fully segregated physically, logistically, which is another challenge, and the ones for which we are certain of legality and we are certain of its legal requirements at the highest possible degree, and we're certain there is zero deforestation risk. So it's a subset basically of our supply base. As a conclusion, I would just say that EUDR is obviously then not for everyone. It should not be the yardstick for any supply base, but it can be a tool to leverage a little bit engagement with the suppliers on verification, external verification, and transparency. But the risk is obviously it will be limited to EU-specific suppliers and EU-directed supply bases. I'll keep it at that. We can go further with questions if you want. Thank you.
Thank you, Olivier. I guess Musim and many other companies have been using voluntary sustainability standards such as a roundtable and sustainable palm oil certification as a great starting point to meet the regulations requirements. So our next speaker, Leslie, Policy and Engagement Manager at ICL, will be providing an overview of how certification by voluntary sustainability standards can support with deforestation risk management and help companies prepare for the regulation. For those who may not be familiar with ICL, it is an alliance that works with many standards to define credible practices, identify solutions to challenges, support innovation, and drive peer-to-peer learning. So Leslie, the floor is yours.
Thank you, Paulina. Thank you for the invitation to join this very interesting panel. So as Paulina just mentioned, for those of you who don't know ICL, so we are a global membership organization and we work to strengthen the credibility and effectiveness of sustainability standards and the sustainability certification system that we also call sustainability system. So if you hear me mention sustainability system, that refers to sustainability standard and certification. So as maybe most of you know, those are already widely used in commodity supply chains and they can play a practical role in managing deforestation risk under this new legislation that is EUDR. So at ICL, we have worked with sustainability system across the sector for 2 decades now. We have a diverse community of more than 45 schemes at the moment, and we support them by defining credible practices, trying to identify solutions to key sustainability challenges, such as deforestation. We share insights on credible action in practice, and we share evidence on the impacts of such sustainability tools. And maybe to make it a bit more understandable for the audience, so what credibility means when translated into financial language. So it can mean auditability to reduce verification risk. It can mean more traceability to support more supply chain mapping. It can also mean more standardized data, which can enable portfolio level risk screening. Next slide, please. So for many, like the last couple of years now, we are trying to look at what sustainability systems can do to support a more effective EUDR implementation. And what we have come to realize is that companies can efficiently implement and scale their DCF supply chain commitments by using sustainability systems. In fact, those standards, those certifications have often decades of on-the-ground experience already. In also higher risk countries, they can offer the greatest amount of evidence demonstrating the effectiveness and impact they have on the DCF challenges, and they can enable the exchange of reliable data for managing risk, which is a key factor if you want to implement EUDR in a credible way. Next slide, please. So to go more into like concrete examples of responses of roles that sustainabilities have been playing to support companies to respond and already adapt to those changing stakeholder needs, including in light of the EUDR implementation. What we have realized is that sustainability systems have already been creating tailored capacity building and support systems for companies. They have been aligning their definition and normative requirements to the EUDR requirements. They have been digitizing data collection tools. They have been adapting their chain of custody and traceability solution already. They have been supporting more responsible data collection, data use, data sharing, and they have been providing more consistent risk data to the certified entities. So I will give 3 key takeaways from our work. So we have realized that credible voluntary approaches and mandatory obligation can be mutually supportive. Companies can leverage credible sustainability system to support their legal compliance effort and also to pursue broader sustainability outcomes beyond strict compliance with the legislation. And finally, that credible sustainability systems are dynamic and are adaptive. They constantly evolve, they constantly improve and align with relevant legislation, such as EUDR, but other sustainability legislations as well. Next slide, please. So what does it mean for financial institution? It means that certification can help reduce due diligence complexity, but that gap still must be very actively managed by those institutions. For banks, the key is not whether a client is certified, but what certification tells you about their readiness and where the risks still are. So I've put on the screen some concrete example of what you should ask yourself depending on the job you have. So if you have like a relationships managers, you should ask yourself, okay, do you have certification? Do the company has certification? If yes, what percentage of supply is covered? And then what are the gaps to EUDR? If you are more working at the ESG level, if you are part of a sustainability teams, then you should identify which schemes are closest to EUDR requirements. And there are plenty of tools that exist that can help you to do that. How the sustainability system can support your clients in closing the gaps to be EUDR ready, EUDR compliant. And then try to think about how to align certification with some concrete transition plans. So maybe collaborate more closely with some of the sustainability systems that you feel are the more up to speed and make sense for your company. And finally, if you are part of a risk teams, then treat certification as a risk indicator, but not as a proof of compliance, and combine certification with other geolocalization data, other country or commodity risk system, as well as your client due diligence systems. Next slide. So to summarize, certification and sustainability system should be seen as a starting point and not the endpoints toward EUDR readiness and EUDR implementation. Certification can help move clients from like limited visibility on their supply chains toward more structured, auditable systems and auditable data. But EUDR readiness requires more than certification. Certification is not equal to compliance with EUDR. There should be additional steps that should be met by companies: plot level geolocalization, robust risk assessment, formal due diligence statements, and so on. So for financial institutions, certification is a useful risk signal, but it should be combined with independent and credible due diligence processes and, of course, active client engagement. So I will end by saying that from a financial perspective, certification does not remove risk, but it makes that risk more visible, more structured, and more manageable. Thank you.
Thank you, Leslie. So as we've heard from our three speakers so far, there are several systems and resources to support companies to understand and implement the regulation. However, there was a big gap in resources available specifically for financial institutions. So for the colleagues managing the relationship between the banks and the companies that are regulated by the EUDR. So this is why ZSL created the EU Deforestation Regulation Guide for Relationship Managers with philanthropic support from HSBC. So I'm now gonna pass it on to Imogen, who is Sustainable Business Advisor at ZSL, to provide an overview of what the guide covers, how relationship managers in financial institutions can use it to support their clients, and most importantly, the opportunities for sustainable finance to be deployed in support to support these companies. So Imogen, over to you.
Great, thank you, Paulina. Yeah, I'm going to talk you through the EUDR guide for relationship managers that we published with support from HSBC at the end of last year. So we have been working with HSBC for about a year and a half now, and we started by delivering training sessions on EUDR for relationship managers that are working across different geographies and were exposed to a variety of the commodities that are in scope of the regulation. And then we used the learnings and the questions that came out of these sessions to start creating this practical guide as a tool for RMs to engage constructively with their clients. So we made this because most of the guidance so far on EUDR has been aimed at the regulated companies themselves. And this is really focusing on how can RMs have these conversations with clients to understand where clients are at with that EUDR, what the funding gaps are, and what are the opportunities for banks for financing EUDR readiness. So this is the content page of the guide. We start with like a one-page summary, which is just introducing the issue of deforestation, how the regulation addresses the issue, and then into how RMs can engage with clients on EUDR. So we know that RMs are really busy with lots of competing priorities. So if they can engage with just one page in the guide, then it would be that one. And then the rest of the guide goes into more detail for each of these points. So we've structured the main body of the guide around this 5-step framework that RMs can use in their client conversations. So the idea is that over time, we'll help move to discussions from like basic awareness through active engagement and into ongoing monitoring. And it's not aiming to turn RMs into auditors, but just to kind of give the right questions and the context to guide the conversations with clients effectively. So lots of companies still have a limited awareness of EUDR and the potential impacts that it will have on their business. So this first step is just about raising awareness with client organizations. It's a really important first step. And the way that RMs can kind of start having these discussions, we have framed it around a few questions. So clarifying whether the company is directly regulated or indirectly affected by the regulation, because even if they're indirectly kind of linked to EU markets, they'll still have obligations for traceability and documentation. RMs can ask clients how they're preparing their supply chains, because meeting EUDR requirements for legality, deforestation-free sourcing, geolocation data, as Leslie already touched on, it's a major ask and will take time to prepare for. And then asking if they have a responsible lead that's been appointed. So this accountability is important for coordinating compliance and really kickstarting their supplier engagement. And this is the one pager I was talking about on what the regulation is, who's regulated, what's required. And this can be used by RMs and also shared with clients as a first step to understanding the regulation. So RMs can then sort of help clients understand the legal, financial, reputational costs of an action versus the opportunity to access green finance, enhance their resilience, and fundamentally maintain access to EU markets. So RMs can kind of highlight to companies that are in scope of EUDR what the penalties include, which Robert's already touched on, but fines of up to 4% of the company's EU market turnover, confiscation of products and revenue, and potentially even suspension from EU market access. So on the business case, it's important to note that tackling the issue of deforestation and forest degradation does also open up product offerings in sustainable finance. So there's a few examples here around sustainability-linked loans, blended finance facilities, and sustainable trade finance and shipment credit lines. So once the risks and opportunities have been identified, RMs can then support clients to assess their progress towards EUDR compliance and to identify kind of key risk areas to focus on. So the questions here have been split into like 3 buckets. First one is around information collection. So is the client collecting geolocation data? For how much of their supply base have they got this data for? Where are the gaps? And then on to risk assessment. So how are clients monitoring for deforestation in their supply chains? How are they monitoring for legality risk? And then to risk mitigation. So once these risks have been identified, what steps are being taken to mitigate these risks? Do they have contingency plans in place if suppliers can't comply with the regulation? How are they supporting suppliers, especially smallholders, to meet EUDR, because a number of the regulated commodities have a really significant smallholder supply base. So clients should be providing technical, financial support for these really big data collection asks. And then because deforestation drivers are not limited to like a particular sector or a company, clients need to be collaborating on a larger scale through landscape initiatives and industry platforms in order to tackle forest loss. So like this example in the rubber sector, GPSNR has developed a shared investment mechanism so that manufacturing members of the downstream companies can pay in to support smallholder programs which seek to increase yields and therefore reduce incentives for forest clearance. And there's also an example here from the Consumer Goods Forum, who developed the Forest Positive Coalition to scale deforestation-free and forest-positive farming. And finally, once all the groundwork's been laid, RMs can work with clients to track their progress over time and assess improvements in traceability, how clients are mitigating risk to respond to evolving risks, and also, as mentioned before, regulatory updates potentially. So that was a whistle-stop tour of the guide. It's a free open access tool which we hope will be useful for RMs to communicate with their clients on incoming legislation, and we will share a link to this in the chat. Thank you.
Thanks, Imogen. Thank you all for these great presentations. So hopefully they provided some context as to what the regulation covers and how financial institutions can support companies that are regulated under EUDR. So could I please ask all of our speakers to turn your cameras on for our panel discussion. So we'll give some time for more questions to come in through the Q&A box, but in the meantime, I'll start by asking one question per panelist. I'll start with Olivier, if that's okay. um, so in 2024, Musim has announced its first sustainability-linked revolving credit facility, which with HSBC and Rabobank, which was anchored on three key performance indicators. So the first one was RSPO certification for independent smallholders, then training of those smallholders, and then maintaining a deforestation-free palm oil supply chain. So although EUDR is not explicitly mentioned in the KPIs, these KPIs that you set clearly support actions that are aligned with the regulation. So could you tell us a bit more about how sustainable finance can support EUDR implementation on the ground, just to give a bit of more flavor to our colleagues that may be listening and spark some ideas?
Thanks, Paulina. Yes, as you mentioned, the SLL were here towards smallholders and deforestation. Linked topics, obviously. The fact that the smallholders were trained in good agricultural practices and had some awareness sessions about no deforestation was the basis of the intervention, I would say. The certification, the increase in certification, RSPO certification of independent smallholders was also important. And I insist on the fact they're independent smallholders. So there really are smallholders out there, most of them in our supply chain, but not all of them in our supply chain. How does it help them to get EUDR compliance? Well, because RSPO will be required from them a lot of legality, a lot of things about deforestation. And that supports not only directly the supply chain, our supply chain, but also it supports other smallholders to see that you can get access, better access to market, or you have an easier access to market through certification. Certification, I think, like as you mentioned, it's not the tool, but you can use it as an indicator of preparedness, of how well you can prepare your supply base. I will go back to the gap that I see. The issue is you can get a whole group of smaller certified RSPO, but two things can happen, a couple of things can happen. One of the smallholders might say, I do not want my data to be shared with the EU because I maybe do not want it as a start, it's my private data, maybe because I do not see why I should, for any other reason, and that makes everything else impossible to share at that time. Or there can be an issue of a gap between the deforestation definition of the EU and the tool that's used by the RSPO to determine that it's deforestation free. So using HEV and HEV-HES approach, which is a very good approach at the landscape level, will not guarantee compliance with the EUDR, where the definition of deforestation is extremely strict and very locally based, on the plot based. So we still have some gaps, but in a broader sense, it helps farmers a lot to prepare better for not just EUDR, but also local regulations. We have ISPO certification in Indonesia, and there's other countries that will require possibly some due diligence form of market access as well. And if anything else, it gives them access to a premium market at the moment. And if I can add the real goal for them, or what's attractive for most of them, it can be that it helps them improve their yields because they get more support in terms of good agricultural practices. So yes, it's a positive, net, it's a positive in terms of preparedness for the EUDR, even though it might not be the exact aim. Thanks.
Thanks, Olivier. Really useful. And I guess a big question that I'm asked all the time internally and also in conversations with others is what happens if the companies are not ready? So Robert, in your presentation, you mentioned that as part of enforcing the EUDR, European member states can impose turnover linked fines or confiscation of goods, market access restrictions. So why is this important, obviously for companies, but most importantly for financial institutions? Like, what are the risks if we are not prepared as a financial sector? You're muted.
Sorry. Yeah, I don't want to sound too catastrophic, but there are clearly, many risks here that need to be identified and grappled with by financial institutions at this point. So the first problem is clearly the uncertainty of scope at the moment. And the fact is that financial institutions are in the awkward position of being outside the operative regime, but plainly right inside policy and the business of it. So that means engaging now has to happen. There are risks about what a financial institution says to a client about that client's EUDR compliance. So there have been well-documented risks already here of financial institutions becoming somewhat shadow regulators or starting to give quasi-legal or quasi-regulatory comfort to clients. So in assessing a client, they may say that it's or give the impression that it's EUDR ready, low risk, or outside the scope. So that creates more legal exposure. So misstatement, whether in law or in contract, advisory liability, challenges on governance, and other disclosure issues. So there is a risk of this spilling into private law actions as well as regulatory risk as well. And that means that there's got to be a lot of thought put into credit onboarding and ongoing monitoring processes. I think Leslie outlined, a lot of the work that needs to be done here, and those are the mitigating factors and really the essential work that should be done. And I think that even if financial institutions are not directly in scope under EUDR, they will probably also face questions under wider governance and risk management and exposure of portfolios to deforestation-linked sectors. So it's a rather it could be construed as slightly pessimistic outlook, but there's lots of risk to be aware of and prepare for now, and there are of course lots of mitigating steps that can be taken now.
Thank you, Robert. Really, really important. And I guess, Leslie, maybe coming to you, you mentioned that certification is a credible system and a useful signal for relationship managers in financial institutions, but that this really needs to be combined with independent and credible due diligence processes and proactive client engagement, which kind of relates to what Robert was saying. So, why is it important for financial institutions to be proactive rather than reactive with regards to EUDR, and what kind of steps or actions do you recommend we take?
So I think I mentioned a couple of those steps already in my slides, but I think you should do like your own due diligence and look at all the certification systems that are out there, right? And see what they are offering and how best it fits to, your own challenges, requirements beyond the EUDR. And you will see like there are plenty of standards and certification systems that have a lot of offerings around the EUDR. The issue is how credible they are, and you have various tools that are out there and will support companies to benchmark the various systems. ICIL has one, ITC has, OECD has also some benchmarking guidance around that. So there are plenty of NGOs and consultancy firms that can support in the benchmarking. And then once you have maybe selected, 2-3 certification systems that sound good to your company, meet with them, talk to them, look at their offerings, try to understand how they are supporting, the stakeholders on the ground, or they get the data, or they verify the data. Some of the certification systems have third-party certified. Those some are not. So there are various issues that you should check and discuss with them. And then once you have chosen a system that seems to be working fine with your expectation, then it's not as I was saying in my presentation, it's not the end of the road. Companies are still the ones responsible. They are the ones that should be EUDR compliant. So the conversation and the collaboration start starts here, right? And even more as we see that the Commission is saying various things and things like that, it means that there should remain some kind of flexibility and open dialogue to make sure that the companies remain on the same page of the certificate holders and stuff like that.
Thanks. Imogen, I'm gonna switch to you. So we've heard a lot about the risks, right? And what happens if companies aren't prepared and the potential consequences. But I guess one thing that I'm personally very keen on is looking at the opportunities. With every risk, there is always an opportunity. And the point of the EU Deforestation Regulation guide for relationship managers that we published in December with you is basically trying to look into that. So what are the opportunities for banks to support companies and help them move ahead and prepare? So now that the guide is out and is publicly available for anyone to use, what is ZSL doing to socialize it, and how can you guys support financial institutions, not just on EUDR specifically, but more broadly on deforestation risk?
Yes, sure. So in terms of what we're doing to engage other FIs to start with, we have been presenting the guide and kind of related insights at industry events and raising awareness to try and encourage practical action on deforestation and EUDR, participating in different working groups with FIs and other stakeholders focused on deforestation, sustainable finance, supply chain risk. Some of you may be familiar with the Spot platform, so it's a free public resource that FIs can use to assess company disclosure and strengthen their engagement, pinpoint engagement on ESG and deforestation issues. And this is a platform we've been running for the last 11 years. We do assessments on palm oil companies, timber and pulp, natural rubber companies, and all public available on the ZSL website. And delivering training to financial institutions on EUDR. We've been expanding our engagement through ZSL Sustainable Finance Team. We have members in Indonesia, Malaysia, Thailand, who can support more sort of regionally grounded work with financial sector. And yes, spreading the word through social media posts. We're working on a video about the guide in collaboration with WWF as well.
So lots of ways to get involved. And also we're open. I mean, we're supporting this work through philanthropy, but we're always open for others to come in. So if you want to get involved, just feel free to contact us. So Robert, I'll move back to you. There's one question in the Q&A that kind of relates to a question that I wanted to ask you. So can you speak a bit more about the potential changes being proposed to the EUDR in Brussels? And are they just looking at the current risk country profiles, or are there other significant parts of the regulation also being looked at? And what is the timeline for it to come into full force? And I guess most importantly, what is the best way for financial institutions to keep an eye on any updates and changes in the regulation?
The short answer is that the ongoing discussion is not just about those risk metrics, but still yet again about further simplifying the EUDR. So it's something we've been familiar with over the past years in relation to this regulation. So that debate's not limited to country benchmarking or a no risk category. There are also discussions concerning downstream obligations. So those obligations have already been simplified and the burden has been lifted on downstream actors in terms of due diligence requirements, reporting burdens, treatment of small and micro enterprises, and the operation of the EU information system. So it's slightly unsatisfactory position whereby we know what we have now, but we only have to wait to the 30th of April for the simplification statement to see what goes into it next. But there is clear potential for a number of these areas to move further, probably in the direction of simplification in inverted commas. But the law remains as it is at the moment, as do the timeframes. So As I said, the Commission's got to publish this simplification review by the end of April. And then the main application dates are 30th of December this year for large operators, and then 30th of June 2027 for the others. Oh, sorry, and you also asked how best to keep up with it, and I think that's quite tricky. I would say just watch out for updates on law firm websites or from anyone. But in particular, there are lots of good updater services, and the Commission's website itself is useful and kept up to date, if a bit dense.
Thank you.
Yeah.
Yeah. Olivier, maybe I'll switch back to you with a more general question, because I've been trying to see how financial institutions, including HSBC, can support this more. So there has been a lot of pre-competitive collaboration between companies for a long time, not just on EUDR, but a lot of common challenges in sourcing areas. So can you tell us a bit more about collaborative initiatives that you're part of? I'm thinking, for example, about the palm oil collaboration group and the tools that you have developed to support traceability, but any other initiatives, including jurisdictional or landscape approaches, and what could banks or the wider financial sector do to support these a bit more?
Well, from the banks, we always expect their money, but not just. I think if we look at the jurisdictional level, so we've been trying to support small in particular at jurisdictional level. The RSPO, on the other hand, has a jurisdictional approach, sort of standard. I wouldn't call it a standard, it's not for certification, but it's a way of supporting jurisdictions to prepare their suppliers, I mean the producers in their area who are palm producers, to be ready for RSPO certification, or to at least have better awareness about no deforestation, no exploitation, no peat in particular. As far as we're concerned, it's mostly about smallholders. Our work is a lot about smallholders. It's a lot about engagement with our suppliers. The financial institutions can help through, I think it's a lot of awareness at the moment. It's to reduce the fear of EUDR failure. It's not a matter, EUDR is a part of the market. EU is a part of the market. It's an important part of the market, but it's not the only part of the market. On the other hand, it's sending us a message. It's a bit what I was hoping. I think, Robert, you mentioned something equivalent to the Brussels effect. So when the EU is trying to change a sector or multiple sectors in this case through its legislations. I'm not sure they're succeeding very well this time, which is a bit of a shame, but so be it. It's a bit too exclusive. It could have been more inclusive. And that's where banks can help support further inclusiveness to make sure that we, for example, do not shed some suppliers because they're not yet ready for EUDR. It's how we can give them more understanding of this, of how they can become basically compliant with EUDR. In particular, EUDR, but not just that. How you improve your legality, how you demonstrate legality. And I mean legality, not that they are illegal today, but how they can demonstrate legality. So it's a matter of being quite inclusive. And from the bank's joke aside about the money, it's about time. It's about how you set goals which are a couple of years down the road and not immediate, even though EUDR is facing us at the end of this year. Hopefully, if there's no change again, we will have to prepare for the next. First, we need to go beyond EUDR, and second, we need to prepare for next couple of years. How do we make it so that the people who are eligible for EUDR compliance become more and more, not just because they were not compliant, but because they could not demonstrate their compliance? I think that's the key element, how you demonstrate your compliance. The way we deal with deforestation risk in Musim, for example, but others do roughly the same, is by saying you are not non-compliant, hence you are compliant, hence you have no deforestation risk. EUDR is asking us to demonstrate that compliance, and that's where there's a lot of issues, in particular for smallholders, online titles, let's say. So how do we make it so that companies can support and local governments can support further compliance, demonstration of compliance? I would say that's what you can do. Support landscape initiatives, indeed, jurisdictional initiatives, with a bit of patience. So longer term projects, more than 3 years, 3-4 years down the road. Thanks. And if you can finance smallholders, if you find a way of financing smallholders, do it. Take some risk on board. We'll be happy to help a little bit, but take some risk on board, but try to find a way of going directly to the smallholders. Thanks.
Yeah, that's really important, and a message that we keep hearing over and over again across different regions. And I guess Cedesel has had Spot for a long time, Imogen, and it's been a really helpful tool for not just financial institutions, but for others like certification schemes to see how companies are evolving in their no deforestation or deforestation and conversion-free commitments. So can you tell us a bit more about SPOT and whether there are indicators that relate to EUDR?
Yes, thank you. Maybe first thing to say is that SPOT, we've been running it for 11 years, but it is being paused in 2026 while we're kind of reviewing the future of assessments, what they look like and what's evolving best practice. And that would include kind of reviewing how EUDR related expectations are shaping the sectors in palm oil, timber and pulp, natural rubber. We probably don't see SPOT becoming like an EU aligned tool or like a due diligence kind of system, because other organizations are doing this well, but it's always kind of been broader than that. So it goes beyond deforestation, including other kind of biodiversity, governance, social risks in the assessments. And we are seeing a wider kind of market shift with other frameworks like RSPO, AFI aligning a bit more with EUDR regulated regulation expectations. So this is kind of a question of how SPOT stays relevant and useful in the wider context. So we will definitely be reviewing EUDR. And I think already there are indicators that exist on traceability, maps of suppliers, maps of smallholders, commitments on zero deforestation, implementation on these commitments to zero deforestation. So I think it's a really useful tool to kind of understand how far a company is along its sustainability journey. But bearing in mind that we're looking at publicly available information, so it's possible that companies are already kind of doing this due diligence and have geolocation data, but it's not publicly available. But it is definitely a useful tool to start assessing how companies are doing.
Yeah. Leslie, just I guess I wanted to come back to you with just a final question on sustainability systems. So people internally ask me a lot, like what standard is better, like what certification is credible, what's the role of national standards versus international and voluntary standards. So can you tell us a bit more about the role of MSBO, ISBO, so the national standards for palm oil in Indonesia and Malaysia, or any others that you've been working with, and how banks maybe can navigate all of these different, you've pointed us to some sources of information, but like just generally, what's your view on how national standards can support EUDR compliance?
So I'm not sure I'm the best person to reply to that, but I'll try. And good that I have like other colleagues that work more in collaboration with national standards, and we are just starting a project on that, because there are definitely a lot of interlinkages between voluntary sustainability standards and national standards. More than often, from what I've heard, don't quote me on that, but a lot of national standards are like kind of copy-paste of voluntary sustainability standards that were already functioning in the national value chains for global value chains for some time. So I think, or some of those national standards have already like showcased their credibility, but of course, again, it's sector dependent, it's country dependent, depend on the government, also governance and stuff like that. But if it's something that is of your interest, for sure we have like a new project that just started on that, and I'm sure there is some Asian countries and African countries concerned about that, and I will be happy to come back and share more about the findings on that at a later stage.
Thank you, Olivier. I don't know if you want to.
If I can just say one word, because we are talking a lot about due diligence, Imogen was mentioning, we just did like a thorough paper on role of sustainability standards, what they can do to support companies' due diligence. It took us a year to do that really, and collect some case studies and stuff like that. I will share that in the chat, because I think it's a good document for companies to understand how they can collaborate with sustainability standards, what they can do, but also what are their limits. I just wanted to flag that before I stop.
Sounds good. Definitely one that we should share internally and with others as well through platforms that we participate in. So we're reaching kind of the end of the webinar. We still have a bit more time. So I want to open to all of our panelists, I don't know, for final reflections or messages that you want to send to financial institutions or others out there. So maybe we'll start with Olivier, if that's okay.
Sure, I think I've said quite a lot already on what we're expecting from financial institutions because you went straight down that road. But yeah, it's a matter of, but I can go back on the matter of verification. I think it's a matter of, for example, we get our EUDR, we have a special EUDR procedure that we get verified externally. So that's a way of increasing trust. At the end of the day, it will be up to the companies to be responsible for their EUDR compliance. I think the financial institution should ask them if they have a system, if they can disclose that system, and even better if it's externally verified, but at the very minimum, if they have a system, how do you assess your risk? How do you ensure that you can still have access to the EU market? And maybe the other question to be asked is, why don't you want to access the EU market? And is that really the end of the world? Maybe you have a very good national market or other market, and you feel that it will be too restrictive for you to get to the EU market. It's not, it's a matter of keeping an open mind on that perspective, I would say. Thanks.
Thank you, Imogen, then Robert and Leslie.
Yeah, I guess maybe I would say the biggest gap that we see through Spot and some of our other work is this like gap between commitments and implementation. So if FIs can engage early on and ask the right questions, so not just do you have a commitment, but how can you evidence it? Where are the gaps? Like where can we support? So yeah, I hope that the guide and other tools are useful to kickstart that conversation before the end of the year when regulation comes into force.
I suppose one thing I haven't mentioned from a legal point of view that might be just worth flagging, I think we touched on, is the fact that financial institutions obviously need to consider their other ESG related regulations and obligations and disclosure requirements at the same time. So, for example, CSDDD, and there's obviously work to be done to make sure that setting up EUDR governance processes work efficiently alongside those other processes that may already be set up, rather than obviously creating lots of different parallel streams, which will just be inefficient and could lead to gaps.
Yeah, really important. Leslie.
Yes, I think Robert said a bit what I wanted to say, that they should not reinvent the wheel. A lot have been done already by various organizations, and yeah, don't start from scratch, because I'm sure there will be tools, there are knowledge out there already. So just collaborate, get in touch with sustainability systems, national, voluntary, whatever organization, other companies that have done a lot already in the last couple of years to be EUDR compliant. So yes, don't reinvent the wheel.
Thank you. So we are at time. So I would like to thank all of our speakers and ZSL for organizing the webinar, and to our attendees for joining. Please keep an eye on the ZSL website for upcoming events, and let us know also your thoughts through the survey that you will receive by email. So as I've said before, our work with ZSL is philanthropic. We're really open to collaborating with other FIs. So if you're interested in learning more or supporting this work, please reach out to me or the ZSL team. On the screen, you can now see the QR codes to access more information, including the EUDR guide for relationship managers. And we'll have another session later today. So if your colleagues in the Americas would like to join that, please share the link with them. Thank you again, everyone, for joining, and have a great day.
Thanks, everyone.
Thank you.